Can you define payroll cards? These cards are types of smart cards issued by banks to facilitate salary payments between employer and employees. Through payroll card, employer can load salary payments onto an employee's smart card. An employee can withdraw the salary even though he or she doesn't have an account in the bank. What is check discount? Check discounting service is financial institution allows you to take funds against a check without waiting for that check to clear. More sophisticated discounting scenarios use post-dated checks, creating the equivalent of a short-term loan for the amount and time frame of the check. The lending institution typically charges interest on the amount that's withdrawn, as well as a range of service fees that vary between institutions and countries. Can you explain line of credit? It is an agreement or arrangement between the bank and the borrower, to provide a certain amount of loans on borrower's demand. The borrower can withdraw the amount at any moment of time and pay the interest only on the amount withdrawn. For example, if you have $5,000 line of credit, you can withdraw the full amount or any amount less than $5,000, say $2,000, and only pay the interest for the amount withdrawn, in this case $2,000. Can you define fiscal deficit? Fiscal deficit is the difference between the government's total receipts, excluding borrowings. Can you define subprime crisis? The current subprime crisis is due to subprime lending. These are the loans given to the people having low credit rating. Can you define repo rate? It is the rate at which our banks borrow rupees from RBI. Whenever the banks have any shortage of funds, they can borrow it from RBI. A reduction in the repo rate will help banks to get money at a cheaper rate. When the repo rate increases, borrowing from RBI becomes more expensive. Can you explain cashier's check? A cashier check issued by the bank on behalf of the customer and takes the guarantee for the payment. The payment is done from the bank's own funds and signed by the cashier. The cashier check is issued when rapid settlement is necessary. Can you explain NBFCs? Non-bank financial companies, NBFCs, are financial institutions that provide banking services, but do not hold a banking license. NBFCs do offer all sorts of banking services, such as loans and credit facilities, retirement planning, money markets, underwriting, and merger activities. These institutions are not allowed to take deposits from the public. Can you explain overdraft protection? Overdraft protection is a service that is provided by a bank to their customer. For instance, if you are holding two accounts, saving and credit account, in the same bank. Now, if one of your accounts does not have enough cash to process the checks, or to cover the purchases, the bank will transfer money from one account to another account, which does not have cash, so to prevent check return or to clear your shopping or electricity bills. Can you explain cross-check? A cross-check indicates the amount should be deposited into the payee's account and cannot be cashed by the bank over the counter. Here in the image, number 2, you can see two crossed lines on the left side corner of the check that indicates cross-check. Can you explain annual percentage rate? APR, annual percentage rate, is a charge or interest that the bank imposes on their customers for using their services like loans, credit cards, mortgage loan, etc. The interest rate or fees imposed is calculated annually. Can you explain bank rate? Bank rate, also referred to as the discount rate, is the rate of interest which a central bank charges on the loans and advances that it extends to commercial banks and other financial intermediaries. Changes in the bank rate are often used by central banks to control the money supply. Can you define cost of debt? When any company borrows funds from a financial institution, bank, or other resources, the interest paid on that amount is known as cost of debt. Can you define balloon payment? The balloon payment is the final lump sum payment that is due. When the entire loan payment is not amortized over the life of the loan, the remaining balance is due as the final repayment to the lender. Balloon payment can occur within an adjustable rate or fixed rate mortgage. Can you define amortization? The repayment of the loan by installment to cover principal amount with interest is known as amortization. Can you define negative amortization? When repayment of the loan is less than the loan's accumulated interest, then negative amortization occurs. It will increase the loan amount instead of decreasing it. It is also known as deferred interest. Can you explain the difference between check and demand draft? Both are used for the transfer of the amount between two accounts of same banks or different bank. Check is issued by an individual who holds the account in a bank, while demand draft is issued by the bank on request, and will charge you for the service. Also, demand draft cannot be cancelled, while checks can be cancelled once issued. Can you define debt-to-income ratio? The debt-to-income ratio is calculated by dividing a loan applicant's total debt payment by his gross income. Can you define adjustment credit? Adjustment credit is a short-term loan made by the Federal Reserve Bank, U.S., to the commercial bank to maintain reserve requirements and support short-term lending when they are short of cash. Can you explain foreign draft? It is an alternative to foreign currency. It is generally used to send money to a foreign country. It can be purchased from the commercial banks, and they will charge you according to their bank's rules and norms. People opt for foreign draft for sending money as this method of sending money is cheaper and safer. It also enables receiver to access the funds quicker than a check or cash transfer. Can you define loan grading? The classification of loan based on various risks and parameters like repayment risk, borrower's credit history, etc. is known as loan grading. This system places loan on 1 to 6 categories, based on the stability and risk associated with the loan. What is credit check? A credit check or a credit report is done by the bank on a basis of an individual's financial credit. It is done in order to make sure that an individual is capable enough of meeting the financial obligation for its business or any other monetary transaction. The credit check is done keeping few aspects in concern like your liabilities, assets, income, etc. Can you define prime rate? Prime rate is the rate of interest that is decided by nations, USA, largest banks for their preferred customers, having a good credit score. Much variable interest depends on the prime rates. For example, the APR, annual percentage rate, on a credit card is 10% plus prime rate, and if the prime rate is 3%, the current APR on that credit card would be 13%. What is ILOC, irrevocable letter of credit? It is a letter of credit or a contractual agreement between financial institute, bank, and the party to which the letter is handed. The ILOC letter cannot be cancelled under any circumstance and guarantees the payment to the party. It requires the bank to pay against the droughts meeting all the terms of ILOC. It is valid up till the stated period of time. For example, if a small business wanted to contract with an overseas supplier for a specified item, they would come to an agreement on the terms of the sale like quality standards and pricing, and ask their respective banks to open a letter of credit for the transaction. The buyer's bank would forward the letter of credit to the seller's bank, where the payment terms would be finalized and the shipment would be made. What is the difference between bank guarantee and letter of credit? There is not much difference between bank guarantee and letter of credit as they both take the liability of payment. A bank guarantee contains more risk for a bank than a letter of credit as it is protecting both parties, the purchaser and seller. What are the different types of loans offered by commercial banks? Startup loans. This type of loan is offered to borrower to start their business and can be used to build a storefront, to acquire inventory or pay franchise fees to get a business rolling. Line of credit. Lines of credit are another type of business loan provided by commercial banks. It is more like a security for your business. The bank allows the customer to withdraw the amount from readily available funds in an adverse time. Customer or company can pay back over time and withdraw money again without going into the loan process. Small Business Administration Loans. It is a federal agency, U.S., that gives funding to small businesses and entrepreneurs. SBA, Small Business Administration, loans are made through banks, credit unions and other lenders who partners with SBA. Can you explain bill discount? Bill discount is a settlement of the bill, where your electricity bill or gas bill is sold to a bank for early payment at less than the face value, and the bank will recover the full amount of the bill from you before a bill due date. For example, electricity bill for ZIS is $1,000. The electricity bill company will sell the bill to the bank for 10% to 20% discount to the face value. Here, the bank will buy the electricity bill for $900 whose face value is $1,000. Now the bank will recover full amount of bill from the customer i.e. $1,000. If the customer fails to pay the bill, the bank will put interest on the outstanding bill and ask the customer for the payment. Can you explain bill purchase? In bill purchase, the loan will be created for the full value of the draft and the interest will be recovered when the actual payment comes. For example, a site draft is presented for which the loan is created for 100% of the draft value. The money is received after 7 days, and then the interest will be recovered for 7 days along with the principal amount. What do you mean by term CASA related to bank? CASA stands for Current Account Savings Account. The CASA ratio shows how much deposit a bank has in this form of current and saving account deposits in the total deposit. A higher CASA ratio means better operating efficiency of the bank because on current account there is no interest payable, whereas on savings account a tiny 3.5% interest is payable by the bank. CASA ratio shows how much of the deposit of the bank comes from the current and savings deposit. Can you define credit netting? A system to reduce the number of credit checks on financial transaction is known as credit netting. Such agreement occurs normally between large banks and other financial institutions. It places all the future and current transaction into one agreement, removing the need for credit checks on each transaction.
Subscribe to our channel, Interview Gig. Visit our website for more articles and interview questions and answers. www.interviewgig.com. Like, share and comment. Don't forget to click the subscribe button. Click the bell button for latest updates.